You're going first? Are you ready?
Yeah.
All right, showtime.
Good afternoon. You hired us because Illy wants to expand,
I think it was
and
a
now
mistake.
is a great opportunity.
I think it was a mistake.
Just wait. Now is a great opportunity to expand. With coffee sales
Where should we
increasing
go?
internationally,
Where should we go?
Brazil and Germany.
Germany?
Brazil and
Are you
Germany.
kidding me?
Germany?
Germany?
Germany,
Why?
because Germany is culturally similar to
Italy?
Italy,
Are you insane?
and they're rich. They can afford our
They are
coffee.
rich, but there's nothing they have in common with Italians.
They
I mean, what do you
believe
think?
They
It's
believe-
Italian. Do Germans stuff like this? Do they?
Italians do, Germans don't. Germans can afford our coffee, and they believe that coffee
Steve
is
is
worth
having
paying
a
for.
nightmare. Dive.
Now, Brazil is really exciting. Not only is Brazil an emerging economy that has high growth potential, Brazil is also the #1 producer of coffee in the world. We currently have contacts in
So
Brazil.
why is that good for us? We are Italians.
I'm about to explain that.
You're
So,
about to explain
after
everything.
we,
Who did you steal that tie from?
this is actually a Donald Trump tie. After our test market in Brazil, and we established that we have a market for espressamente there, we are going to then develop a production center in Brazil so we can take advantage of the amount of coffee beans there. And we'll use that production center to provide coffee to our espressamente chains in Brazil, and we'll use that as a foothold to expand across South America, and we can also provide coffee to North America from there as well.
We won't send it to Germany.
No, not from there.
Where do we get our coffee for Italy?
We get it from all around the world.
So why won't we sell Brazilian coffee in Germany?
Why won't we? We currently do. So, excuse me, we will do that. to
You
some
said
extent.
you weren't going
That's
to
not
do
the
it.
purpose of it. The purpose of it is to have a local distributor there to fuel our chains in Brazil, as well as to
Okay,
expand
keep going,
across
keep
South
going.
America. So
So
how we
area
get?
franchise, who's gonna be and how much are we gonna sell for?
Excuse me?
Who is the area franchise gonna be and how much are we gonna sell the franchise for?
Who is the area franchise going to be in Germany? That's a great question.
Yes,
So in
you
Germany,
answer the question, sir.
Okay,
it is going to be an extreme.
You be
I'm
quiet,
sorry, I didn't see you asking him.
because you weren't paying attention.
okay, for area franchising, we haven't decided who is the ideal partner yet.
Have you
But,
been drinking coffee?
yes,
I can smell it.
okay. But we think the Germany market potential,
How much will we sell the franchise for?
how much we sell,
What's our revenue potential? How much revenue will we make in this business, madam?
9 million per store.
9 million what?
9 million US dollars.
Euros? 9 million US
US.
dollars per store?
For the whole,
Per store?
for the projection for each one,
Per store.
starting in 2013.
And so we're $9 million per store.
as a present value for the franchisee, which is
9 million a store. You know how much a good McDonald's makes in the United States?
the valuation for a single McDonald's.
Each store makes about 2 million in top line revenue a year.
Yep,
So-
so that's our 9.6 million, I believe it is the discounted cash flow.
Okay, so you're gonna sell the area franchise for how much? Total? Madam? You've had coffee too. I smelled something in your breath. The number is?
Number is,
Do you have the number?
I do not.
Okay, do you have a number?
It's $2.5 million for the.
Total?
Plus a $100,000 license.
That's it? So where's the 9 million come from?
Revenue from.
I'm totally confused now. So you're projecting that these guys are gonna generate 9 million per store. We have 26 stores, so it's at least, what? About, almost 30 million, 25 million dollars a year, we're gonna sell for 2.5 million? Why does that make sense, madam? No?
Yeah, we can.
Why does that make sense, madam?
Why would the dairy franchise?
Why does it make sense to sell for that price? We
Why
can
not
sell
put
for the
a-
position where you cannot back up,
No, no,
and you're trying to do
no.
that.
Sure, don't fall over. We want to have a stronghold in Germany.
Make sure they're gonna fall over.
I am leaning against this so that I
Are you
don't fall
tired?
over. No,
Why are
no,
you worried about falling over?
because you're getting extremely close to New York.
I am not a premium coach. I can show you a premium coach. You're great, yeah, it's low, right?
Perfect.
So why are we selling for so low?
Well, through the area franchise model, we want to have a strong partner that will be able to have a strong foothold in that area.
Good answer. What's our premium gonna be? What's our royalty gonna be, sir?
Are we doing 4%
Yes,
royalties?
4%. What's so low?
We deem this appropriate and according to our
You
simulation.
deemed it to be proper? Why
According
is
to
it
our
so low?
simulation, we're profitable with this one.
How much is the royalty for McDonald's? Did you look at any other franchise?
Those are not the documents that you gave us to explore.
Excellent, continue.
I believe we've already covered this.
Let's go back, we have the private franchise in Brazil. It's not a franchise.
We are doing a joint venture.
Okay, how much does it cost for us to do the joint venture?
Per store, it's gonna cost $2 million per
Sir?
store.
You need to retire. Okay, how much is this gonna cost to do Brazil?
To
You
do
guys have a
Brazil with
model?
a net present value of
Show me the
69
model.
million.
I love it. You know, this is where presentations fall apart, when they put the models in. I have an uncontrollable ability to find flaws in models. Unless, of course, the print's so small you can't read anything. All right.
So it's gonna cost us 1 million per store. And then we also plan on building a production facility there, since our beans are coming
So
from.
why is there no initial cash outflow in the first 2 years?
Because, we're gonna take a while to get, we wanna do two,
Why is there no initial cash outflow in the first 2 years?
because we wanna do 2 stores first to test the market and get.
Then why don't we have year 2 be year 0, year 1?
Because we're in 2011, so we were assuming
So
year 0
why is this year
was-
0?
Because it's in 2011.
So your plan
now.
is not to enter into 2013?
Correct.
Why are we
Because-
waiting so long?
Because in Brazil, it's hard to start a business, and we want to make sure we do a joint venture with the right
Continue.
partner. So then after we do that first year and we can generate enough
How much
sales,
revenue are we gonna generate per store?
for the first year, 2 million.
Okay, then why does it say 4 million?
Because we're gonna have 2 stores in that first year.
Wonderful.
So we're gonna have 2 test stores,
Gotcha. Our growth
And then-
rate is what?
30%,
30% a year,
correct?
Until
Compared to
20.
Market share.
36% of the market.
until we have 36% of the market. This doesn't look like that, this looks like
It-
0.2% of the market.
It's
Right,
30
36% is the market growth, and we're growing at 30%.
Okay.
Billy.
All right. Continue.
Okay, so, this shows the cash outlay, and then we're
What else do
assuming,
you propose that we do besides this?
in terms of,
Is just Brazil and Germany as your entire recommendation?
Yes.
for now.
Okay, continue with your number.
So
How much
there-
time do we have, Erin?
They've been at it for 8 minutes.
They have 8 minutes left?
No, they have 4 minutes left.
How many minutes do they have left? It's the only thing that counts.
Sorry, 4.
Thank you.
So then, to summarize, we're at an NPV of 65 million,
This is just for Brazil?
just for
both?
Brazil.
Okay,
And this is taking into account 12 years.
all right.
And then next, we'll go over Germany.
Sure, so we have Germany, we have a similar model, but we're obviously using different assumptions here since it's a franchise model instead. So this is our present value of the future cash flows to Italy from the royalty revenues,
Okay.
$37 million. And this is the net present value of the future cash flows to the franchise owner of $9.4 million with a break even in year 7.
So they're gonna make 9.4, we're gonna make 36.9 on the same business that they run for
Well,
us.
they are actually running the business, so they have a much more intense capital outlay.
So they only make 9 million,
Per
we
store.
make 36.
36 is for the entire German operation.
So this is per store versus per.
Versus, this is Italy total.
Now, that's really not rational to compare these two. How many stores are we gonna have in Germany?
26.
And so what is the real number for Germany for the franchisee? It's 26 times 9.41, what's the number? Quickly?
250.
Is it?
Around-
It's not possible. That is physically impossible, math. Because if it was 10 times 24, it'd be what? Yeah, so either 24 or 26 stores.
26.
All right. Continue.
So that's our numbers for Germany, and I think maybe we want to go in and just.
Let's look at overall numbers because you're running out of time. Overall numbers.
Yes, so two-pronged strategy, so
I
low risk.
understand that, over $102 million project, net present value.
It's the value that we will create by going into both these
Okay,
markets.
let's show me how much we're gonna create on an annual basis doing this. Annual basis.
Want to jump back to the model?
Yeah, so that would be, so these are the royalty revenues to Illy. $270,000 in the first year, and then we project it out for until 2021 and beyond, so we get the perpetuity assumption at about $2.6 million.
So let's freeze our frame so I can follow this. What's the 67.313? What's that?
Sorry.
Right here. What's this?
That is the total Illy sales in,
Total espresso.
total espresso mente sales. in
Okay, so the big problem I have with this, if I look at from 2012 to 2020, I see a slope that's flattening out.
That's correct.
And all that we see in the case suggests that's not what's happening with coffee. So explain to me what's flattening out.
Well, the Terminian's already a fairly mature market, so we think that we're not out there to build 120.
So the reason it's
200
flattening
stores.
out is you chose the mature market?
We chose a mature market because we think this is relatively safe, and we think the franchising option gives us a relatively
But
safe.
what do we know about
source of-
Brazil? Is the estimates are correct? Brazil's gonna be the 5th largest
This
economy
is
in the world.
Germany.
This is Germany.
This is Germany. I want for both, combined. Combined.
That's not more.
Why not?
The combined NPV of the project too.
No, I want to see annual revenue for both combined. You have a recommendation, that's 2 different countries, put them together. Do you put them together?
You can do it right now.
You don't have time. Why didn't you do that?
Because we know Illy's a risk-averse country,
That's
a
not-
company,
it's not
and we
a
want to
country.
give
That's
you a
not my
high-risk and a
question.
low-risk option.
No, why did you do that? Why did you combine the two?
We wanted to show you them as standalone projects, so that you can evaluate them.
It's nice, I appreciate that, but the logical next step is to put it together, so.
We will
our
do that
total-
and send it to you.
How much time do they have, Aaron?
They have 3 seconds.
Okay, thank you very much. Okay, take it, class, it didn't present. Now, for those of you who haven't presented, they had the easiest possible job. My job is to make sure they didn't have an extra advantage by going first, so that every group gets a tougher and tougher meeting, until the last group on Wednesday. I know where you want to go, don't you? Okay, for those who are not presenting this case, you can ask some questions, if you have any.
Ready? All right. You said ready and I didn't hear it. All right, so phase separation
Why are you
solutions,
clapping,
because it's like a ready break during your battle. All right, since I'm willing to bet there are some people that haven't read the case, we'll review quickly the primary issues in this case.
That's garbage, just go.
Do you want me to take
What
a poll?
about that is garbage, let's go, do you not understand?
All right,
Do
so.
you need me to be closer to you?
If you'd like.
If I like, okay?
So one of the main problems here is that PS2 has the top technology in
Is
this
this a
industry.
problem or an opportunity?
It's a problem
What
because.
do you recommend that we do?
It's a problem because the
What
patents.
do you recommend that we
I
do?
recommend that we go into China in both industries.
We do both?
Yes, both. Soil remediation,
And I know what both are, do we have the
And
capacity to do both?
we do have the capacity.
Doesn't she? Yes, okay. What? She doesn't. Okay. Do we have the capacity to do both?
Yes, we do.
Explain.
We have enough cash to finance the JVs, and what we don't have in cash, we can raise debt.
So we're gonna finance both of these?
Well, our part of it.
What structure? What percent?
50-50.
A 50-50 deal? That is a really ugly mustache. 50-50 deal, we have the capacity to do that?
We do. And with one partner being the Chinese government, it will,
The Chinese government?
the EPA,
The EPA?
correct?
Are you
Chinese
willing to
and-
bet the grade for your group on the fact that our partner will be the
The
Chinese
China-
version of EPA? Are
Yeah.
you willing to do that?
They're called the
Are you willing to do-
NIES.
Are you willing to do that? Yes or no?
Yes.
Is it the Chinese version of the EPA? Yes or no? I can't hear you. Is it? Yes or no?
Yes.
Is it? Is it the Chinese version of the EPA, or is it a separate research organization? Two questions. Which one is it? EPA or research area? EPA? Guess what? Two questions, yes and not the answer to two questions. This one's yes.
State Environment Protection Agency, yes.
Is that who we're gonna partner with in the JV? I'm looking at NIES, is that the State Environmental Protection Agency?
I believe they're a division of.
Are they?
Why is he harping on this?
Are they?
Yes.
Are they?
Yes.
All right. Those of you who read the case who are gonna grade, you know what the answer to that is. Continue. They're on record saying that NEIS is a division of the Chinese Environmental Protection Agency, and that they're willing to stake their A, B, or C on that answer. Continue.
So the primary reasons we are going to
Do we
pursue
have any
both of
Chinese
these,
employees?
we will.
Do we have any now?
We currently have the individual that has gone over to China. He's not Chinese, but he is going to lead the
Let me see if I
hiring.
can try it again. Do we have any Chinese employees now?
No, but we will.
Okay. Continue.
The primary reason for pursuing both of these strategies, both of these joint ventures, is because we get the first mover advantage into China.
First mover, so
We
that means
currently-
nobody else is treating waste in China.
First mover advantage with the TPS technology. So we have the.
Do we own that technology?
Yes.
Do we?
We have an exclusive license
We have an exclusive license. That license is exclusive for what?
until 2019
For what? For where?
in China.
Is it? Does it say China?
Yeah, it's the United States, Canada, and China.
Okay. Continue.
So the fact that that expires in 2019 makes this a very important move for us right now, because we can have that first mover advantage with the premier technology to be able to establish the most significant presence in China. And so by 2019, when any potential competitors would be able to compete.
Is that really true? He's saying that with our license, there's no other competition. Do you buy that, sir?
Yes, we have an exclusive license.
For our technology, but not for the problem we're trying to solve.
Right, but our technology is pretty superior to what other things
How
are
do we
on the
know?
market. We've been pretty successful in our operation in Canada, and
Is it superior?
Yeah,
What makes it superior?
It's superior because we're not putting this waste into landfills, and we're not burning it off. And so right now, the Chinese.
So what do we do with it? We
Right.
just breathe it? Where does it go? If we
Right
don't
now
put it in the
it's-
landfills, we don't burn it off. Where's it go?
We process it, and then it becomes, it condenses, or it makes it a smaller amount of waste.
And then what do we do with that waste?
Part of, right, part of it we can sell as
Another
fuel.
part we put in landfill.
Right, but it's a lot, but it's a much smaller amount that goes into landfill. And right now.
Do you have any numbers to support this recommendation, since there
We do.
are numbers in this case? May I see them?
So with the way that we're
She
projecting
must be the
our
number.
capacity, this project will generate an NPV of 77 million. And we should pay back.
Let me look at this. Keep talking, I'm looking, I can, unlike your classmates, I can look at things and understand what you're saying at the same time. Keep going.
So our portion of the profits from this will be 39 million. I'm going to break it down into.
So why, no,
sludge.
you're not moving anything. Why do we lose money in the third year, 2012?
We're expanding capacity. With our soil venture, we're going to do that by way of additional units. And with the sludge, we're going to do that by just increasing the capacity at our existing facility.
What's your growth rate?
Our growth rate is dependent on the increase in capacity.
These numbers, we go from 3.9 million to 23 billion in 1 year, then we go we almost double again, or we double again in the next year. And then we go up another, $12 million, and then up $15 million, and then suddenly we
There's more than
flatline.
one factor that affects the growth.
Why do we flatline? What we know is that there's, and we're talking, this is for both projects, right?
Yes.
For both the sludge and for the PCB. And we know that there are hundreds of thousands of gallons of tons of sludge, and we're gonna have a 10,000 sludge treatment plant.
well, the initial capacity on the sludge treatment plant will be 50, but we're only gonna get 10,000 in the first year. The second year, we can ramp it up to 50 and then continue to go up from
But
there.
how much sludge is there?
Well, in the market, there's only 180,000, and if you do a 2%.
Is there 180,000?
180,000 that we have contract access to.
contract access too, but there's a much more sludge in the entire market.
It's all of China, perhaps, but within this local market, it's 180,000.
And we're gonna treat how much?
Initially, we're gonna be doing 10,000 the first year. The second year, we'll go up to the 50,000, which is part of our capacity, and after that, we'll do some additional
I
capacity.
do not understand why we don't continue to have step function. If we have, because remember, at 2019, we're
Right.
gonna have to renegotiate our deal.
Right, the thing is, there's only,
Why are there not?
there's
this doesn't make any
180,000 in the
sense.
whole
This
market.
does not, you're saying there's not enough market to justify its growth?
Well, we can't have more capacity, there's no reason to have more, extremely greater capacity in the entire market, because it's gonna be capacity that goes unused. And we did
Stop for a second,
calculate
stop for a second. We talked about the growth of China, right?
Yes.
We did the rule of 72, right? If it grows by 7% a year for 20 years, how much larger will the Chinese market be in 2019?
significantly larger than that.
And how much is that? Madam, you can do math in your head, was that for yourself?
Repeat the question.
If it grows by 7% a year for 10 years, which will put us to just beyond 2019, how much larger will the Chinese market be? You can't do math in your head? Well, you can. She's working on it. Are you working on it? No.
72, since you called
I have
it
these
72.
two people, why do I work on it? I'm an MBA, I delegate, right? Anybody? Let's go on the assumption the market is, China is twice as large. Does that have any impact on the amount of oil they import? Yes, does it have any impact on the amount of oil they import?
Yes,
Would that increase the amount of oil?
yes, but,
Does that increase sludge?
right, so all you,
Does that increase demand?
what you're saying is that this is even more attractive than what you're presenting.
Yes.
This is a conservative,
This is disgustingly conservative.
this is,
Why?
this is a major move.
Because there's
for
gonna be other companies that come in and that will take some of the,
Yeah, but if
some of the
demand
profit.
is exploding, no pun intended, can't we grow with it also?
Well, no, but you're also assuming that the Chinese place the same value on the sludge processing that the Canadians do. Canadians have a higher desire to really clean up the environment, whereas China, the price is gonna be lower.
You
in
do
terms of
not
what
see
they're-
the look your teammate is giving you right now.
Yeah?
It's not a look you want to see.
Well, I'm going with this.
What?
I'm going with what I said.
I know you have to, but
Yeah.
she's looking at you saying it's total garbage. You hear what
No,
he's saying?
it's
not
that.
total
It's just
garbage.
in addition to
He's
that.
saying you Chinese people don't care
She's
about
not.
the environment. You even know that? I'm impressed. You're getting a lot better.
They're both ethnic Korean.
I know they are. See what you read books? But Asians don't care about the environment, right?
China's making a serious effort to increase their focus and their spending on environmental cleanup. So what we present as a base case is just the bottom.
So do you agree with your classmate that Canadians care more about the environment than Chinese?
I think Canadians have, that environmental protection is a very high priority. However, the scale isn't really comparable. If we look at how much soil there is in Canada that's contaminated compared to China, despite how people feel about environment, there's just much more of a market in China,
And so China is where our future is.
definitely.
And that's why you have such a conservative projection.
Well, I'm glad you think our suggestion is even better than
So what are we talking about, our net profit value? Percent? Net profit is what?
net profit per year.
Yep.
Their operating costs are around
Net profit is what percent here?
Oh,
Simple math.
30%,
What?
approximately 30%.
And what's our net profit in Canada?
it's about 58%.
So why is it substantially lower in China where we have less competition, the market's growing faster, there are increased demand for it? Why?
We found that the price that we can get per ton is lower in China than in Canada.
Yeah, but our cost should be lower also.
There's gonna be additional costs being in the joint venture.
What?
Being in the joint venture and being in a different country, there's
Oh,
gonna be,
come on, I mean,
they don't have,
What?
they don't have,
And increasing capacity.
I don't understand that. We have two deals which are lockdown deals. We own access to the seaport, we own access to an entire province where the government's supporting us. We're not gonna have to bring in any capital to get this thing going. We have guaranteed demand. We don't have that in Canada. In fact, in Canada, our biggest competitor is located where the biggest market is, and we're far away in Saskatchewan. So this should, if we're making that much money in the middle of nowhere, having to truck all the crap in, how much should we make if we're right where the ships are loading?
We're also incorporating the risk of other companies stealing our technology in China. So there'll be more competition.
So this, you have a theft risk baked into this?
Yeah, into our cash flows, correct.
Wonderful. Could you show you where the theft adjustment is now? In your Excel spreadsheet?
I can show you the breakdown of how.
In your Excel spreadsheet, show me
It
the
would
theft.
be in there, it's in the
theft
revenue.
adjustment.
It's a decrease
Show
in the
me where it
revenue.
is. If you have it there, show me the modification you made to adjust for theft, that you've made that claim. Where is it? Where's the theft adjustment?
Well,
I want the theft adjustment. Peter says there's a
we would
theft
consider
adjustment.
theft to be one of the risks.
Is there a
and
theft
risks
adjustment,
would be-
madam?
It would be
Time.
part of cost of capital.
We're done. Thank you. Okay,
Yes, which is the partner, is the Beijing Institute of Environmental Sciences of the State Environmental Protection Agency. 2 minutes for case talk.
you should have known that code.
We all said it.
Group number 2, your questions for the Smart Alley group.
Yes. How are you financing a 100,000-ton oil sludge plant capacity when the 10,000-ton facility requires $3 million investment?
How are we financing it? We have a lot of cash. And, well, first of all, the 3 million covers, as you can see right here, 50,000 tons is what it's gonna start with. The 10,000 is actually not, you're not correct with that, because it says it's only gonna receive 10,000 in the first year, but the capacity is 50,000 to start off. So, and I mean, that's right from this analyst report right here, which was one of the footnotes in the case of, which I'm guessing we'll read to
Okay,
it.
second question.
Why did you include a terminal value of 57 million in 2018 for your model when you only had 5 million, or you included terminal of 57, you had 5 million in 2018. So how did you get to that terminal value knowing that the patent expires in 2019?
Our terminal value is 3%, which we think is a very conservative estimate of the GDP growth rate in China.
Thank you.
Last question.
Given the relative just ramp up in the project that you're expecting here, and that we only have 15 people and the volatility of our Canadian operations, can you please explain where the cash capacity is going to come from, as well as the human resource capacity?
So from human resources, we have 2 strong JV partners that will be providing a lot of the expertise in the Chinese market. In addition, you know, that there's a huge market of people that we can hire within China. We plan on mostly hiring locals and then only bringing in a few expats who have the technology capabilities. And then someone else wants to talk about the financing. So with financing,
Peter, will you stop eyeing?
Sorry. The debt.
Stop eyeing.
The debt that the company has right now is very low, so we think they can take on additional debt.
Group number 3, your questions for group number 1.
Pardon me. How do you account for competition from Bowden in the Kyoto market and Lianding, which is that Japanese company, in the oil sludge market in China? Have you accounted for that in your numbers?
Our focus is on the partner that we've agreed to work with, and they have the contract access to the amount of sludge that we've projected for.
So it's built into the joint venture agreement that that all of their volumes would come straight to us.
Okay.
Second question. You're very polite as a combatant. It's amazing. Is that going to hurt you too much?
Who of your current board do you think is most qualified to represent you in China?
We have actually brought along a new person, and his name is Glenn Antle. He has actually been working with other companies in Canada in business development and securing new contracts in multiple countries. So
What's your source for that information?
the analyst report.
Oh, that's good. Next.
So you're pursuing 2 strategies. Have you thought at all about what exactly you're going to do first when you enter this market? Who you're going to hire
who's gonna manufacture your product, et cetera? What are you gonna do first?
Have you thought about it?
Yeah,
Yes.
we have.
All right, so, you ready? Let's go. Oh, I like this, he's coming my way.
Paul, we have a plan to create $6 million of value for PS2 through 2019.
That's all?
Because-
$6 million, that's all? These other people are gonna create tens of millions of dollars. $6
They
million?
included a terminal
That's-
value in their projection, and our patent expires in 2019.
It doesn't
Our
expire.
projections, our license to the technology, the patent expires in 2019.
No, is it the license or the patent?
Both, actually.
Correct, continue.
So we have a two-phased approach. This is a conservative plan. We will show you some potential upside
1 second.
options.
What did you just eat?
A mint about an hour ago?
Did you have this look like you've just eaten something? As eating look. It does.
All right, so phase one of our plan is to establish a joint venture in China to treat the contaminated soil market. We know that the soil market in China is 1.5 million tons.
These
That's over 8
NPVs seem
times.
to be way too low to me. Show me your financials.
Absolutely. Todd, you want to bring up the model?
Sure. So he's the financial guy?
I can walk you through it. I'm happy to.
Good, wonderful.
So we took conservative projections, and these are based on, this is the base case scenario. So we go into China with a joint venture. We start out with one mobile unit that has a capacity of 30,000 tons of soil.
Well, we're doing both projects.
We are doing them on a staggered basis. In 2010,
Which one
we're
we start
doing
first?
the soil in China, and then in 2012, we began doing an industrial sludge plant in Ontario. We don't recommend going into the Chinese sludge
Ontario?
market, and we'll tell you why.
You do not want to do
Not
sludge
yet.
in China?
Not yet. Because we did our projections. We know, first of
So you don't
all,
want to do both projects, only one.
we have cash right now.
You don't want to
That's
do both projects, you only do one.
not right now. Because we have cash, that's not an issue. The issue is our human capital constraints. We're a small company. We have 15 employees. We have 3 directors.
There are 1.4 billion people in China. Don't you think we can hire enough?
Absolutely, but if we grow too fast, we risk losing everything.
So we're worried about growing too fast. Is that your fear? Growing too fast?
Yes, in this case, yes.
Why?
If we enter the oil sludge market in China, we don't have experience with oil sludge yet. It's industrial sludge. So we want to
Do we
gain experience in
industrial sludge
Canada.
or oil sludge? Do we have any
Industrial
experience?
sludge.
Do we have that experience? Any? Yes or no? No experience?
Not on an ownership basis.
You're another mustache tree?
I'm sorry.
Mustache?
Yeah, oh yeah.
I tried. I'm still finishing puberty.
6'6".
I have to say that $6 million in value for a company that brings in $6 million revenues right now is a significant growth potential. In fact, in 3 years, our revenues will be over 50% higher than what they are now. And that's before our second project even becomes cash flow positive.
Show me your numbers for your second project. We're gonna go in, when are we going to sludge in China?
We're going to sludge in China in 2014 or later. Our second project
Show
is
me
sludge in
2014.
Ontario.
Let's see sludge in China. Oh,
This
I
is sludge in
love
China.
seeing that. That sucks big time. Year 4, we're flatlined to year 9. That
Because this is a
makes
10
no sense
This
at
is a
all.
facility with 10,000 capacity,
We can
requires
build
a $3 million
larger
investment.
facility. But if we don't start immediately, why would we start with a 10,000 one if we've already proved it in Ontario? Wouldn't we start
We
with a 50,000?
don't have the cash at this point in time, and we don't know if our projects are going well with soil in China. We feel like that's a bigger growth market for us.
Government controls it? I don't understand this. Please explain to me somebody, okay, I really like this. So, we're gonna process the same amount of sludge, but our revenues are gonna go up. How's that gonna happen?
We're increasing prices at the rate of inflation for China, which is approximately 4%.
Okay, but our brain.
We also have a roll-up model, which rolls the single scenario up into multiple, which rolls it into multiple scenarios. The one thing that concerned us a lot about this plan was that the only price that was provided was in one of the industry reports, which said for $400 price per ton, which that makes this incredibly low margin relative to some of the other projects we were working on. And
Our costs are the same,
Okay.
and our revenue is much higher for soil than for sludge.
Okay, let me ask this question. If we do sludge, don't we have some byproducts that we can use as fuel sources?
that's baked into the $400 price.
Does anybody else have that technology? That turns out byproducts. If the answer is no, which it is, then why would you use that number which does not include byproducts?
It does include
That does,
byproducts,
I said that does.
based on the
include
industry
byproducts.
analyst reports.
And then you knock the byproducts, okay. Let's go back to Ontario. Numbers. We flatline in Ontario in year 5. Why is everything flatlining? I hate things that flatline. What's the name of this course series? Flatline? Entrepreneurial flatline?
30% tax.
Yeah, you can teach it if you want it. You might not have very many people. It wouldn't sell out like Israel did, probably. No, the reason that we're
I
doing.
guess that was your attempt at humor, right?
Wonderful one, I guess.
All right, I'll take your word for one. Keep going.
Okay. So the reason for the flat line in the Ontario market is that we wanted to get there and establish, sorry, I lost my train of thought.
It's based on our capacity right now. So we anticipate.
Okay, so let me stop for a second. There's something that's called tar sand, the dirtiest form of oil known to man. Wouldn't that be something that generates sludge, the production of tar sands? What do you think? We're gonna put this plant?
Ontario,
Where tar sand produced?
British Columbia.
What we're going
No,
after is
no,
the
wait, where's
industrial
the tar-
sludge market. They're
That's
in
industrial.
northern Alberta. and British
Northern
Columbia.
Alberta, why are we going on?
We're still already well positioned with our Woosley plant.
No, but why don't we put a plant in northern Alberta? And that's Basket, where the tar sand is being produced?
That, sure, I mean, we can pick lots of places where we can put things. But
How
I
about
think
places
all,
that take advantage of our technology?
there is no crude oil used in North Canada.
Produced.
All crude oil is then piped or trucked or put by rail out. So there's not
When
that
you
much.
produce it, there are residues from the production of crude oil.
Correct.
Which are real bad crap called tar.
Provided the facts that we had in the case, we felt that the best opportunity was to pursue the industrial sludge produced from paint.
That's a great answer. Thank you. Continue. How much time do you have, Aaron?
6, 9.
9 seconds. Sorry. So we'll walk you through step by step the details of each phase.
Don't look so happy. Looks like a man walking to his execution.
So this shows our revenues doubling over 2 years, but we kind of just covered that, so I'm just going to jump right
Let's
into
go
phase
back, let's
one.
go back. I've learned when somebody says, we're going fast, there's something. Come on in. Do you like this? Isn't this flatten out way too soon? Don't you think so? I mean,
The
come on.
approach that we took was, we're looking at this from a 5-year plan
Doesn't
from
this
now.
flatten out way too soon?
I mean, it depends on your opinion. What we thought was, for the next 5 years, we wanted to get a foothold or a beachhead in China through the pop market.
5 years is a half decade.
I understand that.
It's a quarter of a generation. Why are you so conservative?
We're a small company.
We're very small.
We have 15 people right now.
The
We're
other thing-
12 million in revenue.
Right.
Our partners can provide all the people we need.
They can provide
The
sales
more
experience,
people
but not
and,
operational experience.
the more people and cash they provide, the less we benefit from it.
No. If we do a 50-50, we have the technology.
Yeah, but
we'll
every
train
additional
people.
dollar they put in to keep it 50/50, we have to put an additional dollar.
In the form of what?
Cash.
Or
We've already contributed to
technology.
technology.
We can add more technology. We'll help you scale the thing up, which is what
That's a
people.
possibility, but that wasn't discussed.
We do have an upside model that we can show you
Yes.
for the, so right now, this, right now, the soil treatment in China is based on one mobile unit to prove that it works and to prove it's, so this treatment, this model has us adding another unit in year 3 and an additional unit in year 6.
I like this.
So it brings our MPV up to 5.8 million just for our half. It really brings the overall project up to 11.6 million. And we did not include a terminal value because we feel that with the patent expiring, it's inappropriate to predict what the terminal value will be. We don't know what the competitive landscape looks like 10 years out.
Amazing. Continue.
All right. Yeah. So going back to our phase 1 project, it's to enter the soil contamination market in China. Given the fact that the Chinese government has spent $3 billion on
Okay, we have all that. The opportunity is 1.5 million tons of soil.
Yep.
How much are we gonna handle?
We're going to handle
initially, with each
Yeah.
unit, we're
How
gonna
much?
handle 22,500.
Yeah, because our capacity, we're
The
building.
total amount we're gonna handle is what? 50,000
In the
tons
end.
about? 40,000 tons, 44,000 tons?
On the
When we get up to
basis.
75%, we'll be up to 22,500
Out of 1.5 million.
annually.
Initially,
Yeah,
I think that's
initially.
totally
That's
fair.
really small.
That's great, that means we can grow and take
The
more.
difference
I
is-
don't see that in your projections.
Because
That's what
the
we just
license
showed
that
you.
we have is
Yeah.
for a province, not for all of China.
Okay, and what percentage of that is generating that profit?
Using very rough figures, a little more than 10%, more like 13 or 15.
And so that's 150,000 tons or 175,000 tons? And we're gonna do how many tons? 30?
Initially.
Yeah, well, this is a year also.
But the projections we showed you.
This is not a
No,
year,
that's
this
the
is
total.
soil, this is
This
a
is-
Right,
that's
but the
total.
economy is growing, right? They're
The
pretty,
PCBs are not growing, they've been banned,
other POPs are growing.
a little bit.
A little bit
There's
or
a
a
lot
lot?
of renewed environmental interest now, so this is not
So
growing
you
as
don't
fast
think this
as
is a growing
oil.
market? It's gonna be like Canada, we're gonna run out of stuff to decontaminate.
Not nearly as soon as Canada.
How about in
but-
our lifetime?
This is definitely a nascent market, so it's going to
Nascent,
go.
you know what nascent means?
Emerging, new, young.
Thank you. Continue.
Okay. And we recognize that China recognizes the importance of the contaminated soil because of the fact that about 100,000 square kilometers, or roughly 10% of all arable land, is contaminated. And that translates into about $3 billion lost in crops a year that are
So
contaminated.
I ask again, if we have those circumstances,
Mhm.
why are we growing so slowly? Why are we being so conservative?
I think it's the human capital constraints. I mean, like I said earlier, we're
We can't
15
hire other
people.
people?
We absolutely can, but you also, you can never upset anybody by under-promising and over-delivering. We're a $13 million market cap enterprise. We're talking about creating, at a minimum, $6 million of value. That's almost 50% of what we're worth today. Everything else on top of that, we're happy to capture an
There was a
upside.
period of time
But it would be
Dell
foolish
grew
to,
by 100% in revenue by a quarter.
and yeah, we'd be thrilled to do that as
Three
well.
quarters, but you do not plan to do that.
And the
No,
guy
we'd be
called
thrilled
you
to do it.
freaking out because
What?
I didn't know how to handle it.
What?
And the guy called you freaking out because he didn't know how to handle
No,
it.
he knew how to handle it, he just didn't know how to estimate how much the growth would be.
Yeah, I mean, that's fair. But
You guys are conservative, right?
We're conservative.
You're all very conservative.
we're a
Yes.
small company and, sorry, we're a small company. We have $3 million
Gotcha.
in cash.
Okay, okay. So this is a conservative estimate, my little itty bitty company wants to stay
And our
small.
home market's quite volatile in its existence.
Our home market is collapsing, isn't it?
Yes. Even more volatile.
No, it's not.
Volatile on the
It's not
downside.
collapsing.
Well, the
PCB is,
PCB
but
is collapsing.
industrial sludge is not, and oil
Right,
sludge
but
is
it's
not.
still quite volatile.
I want to say we're trying to grow slow. I mean, we're growing 100%, our top line revenues are increasing by 100%.
A year for how many years?
No, in 4 years.
In 4 years, so that's not 100% a year. That's how much?
No, not 100% a year. Yeah, by 20, what is it, 13,
Isn't the
14?
rule of small to large numbers that when you're small, you can grow faster than if you're large? So why are you growing so slowly? That's my question.
Again, like, I hate to be a harping, going back to it, we're a 15-person company, and to build a new plant in
1,
China,
2, 3, 4, 5, 6, 7.
Half of us are here.
With you.
we have 3 managers. So, like, again.
Thank you very much.
Oh, sorry, you said Ontario. I thought you said our market. So we actually operate at the same exact cost, or on a parity on cost with BDV. Given the size of the market in Ontario, we think that there's more than enough capacity. They had so much capacity that they paid us $1.2 million just to hold capacity open in our existing facility. So there's clearly enough demand there, and if we can locate in a place that is adequate from a freight cost standpoint, there's going to be more than enough ability for us both to operate.
Question number 2.
Can you explain, in terms of your projections of the China sludge plant, the 10,000 capacity going forward?
Yeah, so our understanding is that 10,000 in capacity costs $3 million. So that's the investment required for a 10,000 capacity plant.
But they said it starts at 50,000.
Is that your third
It starts at 10,000.
Yeah, my third question, following up on that, is that it says in the case that it starts out at, and if you look at the footnotes, and one of the analyst reports, that 50,000, it has the ability to operate at 50,000 initially, and they're going to get 10,000 coming in. So
Your question is?
my question is, how do you explain that, if it's actually not?
We actually, I mean, we can compare the case. We read the case that said a $3 million investment is for 10,000 tons of capacity.
Okay, good, okay. We'll read different stuff.
Thank you, sir. Group number 3, your questions for group number 2.
Can you show us a slide that is up to phase 1?
Okay. Your second question. Your second question.
Okay. So a footnote at the bottom of page 10 specifically states that the 1.55 million tons is extremely conservative. So why did you guys ignore that and not look at more realistic numbers?
I think that goes to every answer we had for his question, which was just using this as enough, we're able to achieve a really good return. I also think that given the size of our company, we had a hard time over the next 2 to 3 years, or even 3 to 5 years, as this was a new venture, committing, to such giant growth, even to our board. We're a public company, and so I think what we used was conservative. I think that's that's a great point. It could be much bigger, but we were confident using this.
Last question. Group number 3. You want to blow another one, Eric?
How did you come up with your price per ton for oil sludge?
Yeah, that came from our research report.
Which one?
The initiating coverage research report.
I'm going to let
Sorry, I
her.
was just watching.
Bay Street Partners,
Okay.
initiating coverage report.
All right, thank you very much. Group number 1.
That's darn funny.
All right, so good afternoon, everyone. Today we are going to be discussing the further implications of growth, strategy, and where we want to put our company PS2 in the future. So let's get straight down to the point. We want to go right into China, and we want to
authorize the tattoos. So where are you hitting my belly?
I'm just trying to get some space. So we want to go straight into China and work with their soil. So why the China POP market? First of all, we already have a proven competency in soil remediation as shown in the past 6 years.
Why China?
Okay, why China?
Isn't there a great opportunity in Canada that we're missing?
No, there's not. And not as big.
Wait a second. I thought there's all this industrial waste that we can work on, and pharmaceutical waste that we can work on, and oil sludge.
It's not a. Looking at our financials, you will see that it is not as profitable as this opportunity that we have
But I'm
chosen.
hearing from other people that our margins are going to be a lot lower in China. Are they wrong?
They haven't taken into account other aspects of.
So are they wrong? Yes or no?
Yes.
They're wrong.
Well, I mean, when you consider.
Are they wrong?
They are wrong.
They're completely out. So you're not going to want one of them being wrong.
Absolutely not.
And so it's either you're right or they're right. And they're wrong.
Correct.
Okay. You agree?
I do agree. They're going to make. I do agree when they say that
You said
we're going to make less
twice.
money in China.
So you think we can make more money in China than we're making in Canada?
Yes.
They're absolutely completely wrong.
They're absolutely completely wrong.
And you're willing to have your grade BSc if it turns out that they're right and you're wrong?
Well, yes.
Okay, wonderful. I like it. It was very clear, judges.
Okay, well,
Show me your numbers.
All right. So we're going to let.
Show me your numbers.
All right, we're going into the numbers right now, and Eric's going to dig into them.
I want you to dig into them.
Okay,
Your
so
energy.
well, feed off of you, man. So we had to make a lot of assumptions.
Is there a reason you're standing away from the rest of the team?
I was hoping someone would follow me over here and they didn't.
No, they don't like you.
So a lot of these.
Or maybe you don't like them.
We're all coming over.
A lot of what you see up here is case facts and/or referenced in the documents that come straight out of the footnotes. I think there are 2 assumptions, though, that you're going to want me to defend. The first one is going to be this 4-stage growth model that we're looking at right here. Because this is kind of an untapped market, we think that we're going to be able to come in early with a very high early growth rate that is eventually going to start tapering off. Because we're being so profitable, we think that eventually competition is going to come in and is going to start eating into our market share before a slow terminal decline, simply due to the fact that this is a fixed market. There's only so many tons of contaminated soil in China.
I do not buy that at all. We're going to be producing more and more contaminated soil as we grow our economy, and in 20 years our economy is going to be 4 times larger. So I don't see why the production of contaminated stuff is going to go down.
Sure, so I disagree.
You
First of all,
disagree with what? That we're growing the market?
No, I think you're right about growing the market. I think
that we're going to be 4 times larger?
No.
You disagree that if we're 4 times larger, even if the percentage of contaminated soils, percentage of GDP activity goes down, we'll still produce more? You disagree with that?
Yes.
Is he right or am I?
He's right.
Are you willing to pay the price if he's wrong and you're wrong? Because I'm right?
Yes.
Okay, continue.
So the reason that you're wrong is that right now they've already stopped allowing us to create PCBs. And the pop
Are there other
contaminant.
pops that are going to be produced?
There are other pops that are going to be produced, but you're
Will those
assuming
slow
that.
down?
I'm sorry?
Will the total amount of pops produced
Yes,
slow down?
because as the Chinese consumer becomes more environmentally conscious and as technology progresses,
Did you
they're
know
going to
what a
stop.
pop was before this case?
I did not know what a pop was before this case.
I
I didn't know
didn't.
the Chinese consumer was environmentally conscious before this case.
What did you
So let's go on to that second assumption that I wanted to defend, and that is the ownership structure of the joint venture. Just like the two groups before us, we assumed that this was going to be a 50-50 joint venture. We do have a different assumption. In one of the documents referenced in the footnotes, we were told that 2.4 million of our 3.3 million cash position right now is tied up in working capital. So while it looks like we have a little over 3 million in cash, we don't actually have that much to invest in a project like this. Since this is a 50-50 joint venture, we're going to require an equity investment of 1.5 million. We're going to require an investment of 1.5 million. We're going to finance that 50% with debt because we only have $900,000 in cash. So let's take a look at the next slide. If you look at the revenue numbers across the top, they follow that 4-stage projection that I was telling you about.
Across the top are soil numbers.
Well, I mean, the next level down from the. That's still the top. Okay, so coming on down, taking a look at the margins right there, you see that we are taking out
Okay,
the initial.
so again, I have this minor problem. You're saying in 2050 there are no environmental problems in China.
I'm not saying there's no environmental problems.
Our
I'm
revenue
saying that
falls off the table.
revenue falls off the table. You're right. I'm valuing this as an
doesn't
annuity
make
and
any
not as
sense.
perpetuity
This
for the reasons I
doesn't
discussed
make any
earlier.
sense. We go 3, 6, 12, 41.
I have to truncate in order to be able to get the
But the
important
point
years
is
on the
it's going
slide.
down, and I don't think that makes sense.
So that's going back to the earlier revenue projection, or the 4-stage growth model I talked to you about on the last slide?
Doesn't make any sense.
So do you not assume there are going to be competitors coming in and eating
Of
into our
course.
market share?
No, I don't. I assume that the market's going to continue to get larger and larger as the economy grows.
So you think the fact that
No
we are
matter-
one of only 2 major competitors in this space is...
What percentage of all PCs are sold by Apple?
I have no idea.
I don't know.
Anybody? Less than 10%. And has their market cap exploded, even though 90% of all PCs are sold by somebody else?
Yeah, but isn't this short-sighted? That's over the last 10 years, and we're talking about 50 or 40 right here.
I don't buy these numbers at all.
I mean, do you think Apple's going to continue to have the market cap in 40 years that they got right now?
Probably be higher.
Well, I mean, rate of inflation.
And that's it?
Yeah.
That's all they're going to grow by?
I mean, I don't think that Apple's going to continue to grow over the course of the next 30 years like they have over the last 10.
But that's also a story of technological advances.
And aren't we a story of technological
Well, and it's
advance?
outside the scope of this
You
case.
said no?
I just said it's outside the scope of the case. I was going to try and get back to the last
Technological advance, isn't that the heart of who we are?
Yeah, I mean, we were talking about different type of technology, but sure, yes, I agree with your underlying point.
So my question is, I like how you grow to 2019.
Okay.
I do not understand why, by 2024, 5 years later, our revenue has been cut in half. I don't understand that. What I also don't understand is our revenue is cut in half. Everything's cut in half.
That's right.
Even though we've had more than a decade of experience in China.
But we've only got so many tons of soil that we can process. That's going to continue to decline.
That's not true.
So we have a different underlying assumption right there.
I don't see how we can grow our economy and have less total soil to decontaminate.
So we believe that a socially
let me
conscious
ask
Chinese
the question.
consumer is going to demand
me ask the
technologies
question.
that reduce
The amount of protests around environmental
It's going
difficulties are down 29% over the last, was it, 2 years?
And
And
you
so
expect
those,
it to go down as the economy grows?
well, no, I expect them to be.
410,000 people die.
That's just proof of the
And it's
environmental
gonna be
consequences.
higher. And if we bring in more oil, which we will, doesn't that generate more sludge for it to treat?
We're not treating sludge.
You're not
Yeah.
gonna do that at all, right?
No, we don't. We don't think it makes sense for
No
us, given our core
sludge in China?
No sludge.
We have an offer to do sludge in China. To do it, it's a captive, controlled offer, and you don't wanna do it?
This is why I'm short.
This is
No,
why
we
you're
don't.
short?
I mean, there are opportunities to explore that in the future.
There's not opportunity, we have a deal offer right now.
Maybe we don't
You
have the
turn it
capital
down?
right now.
We don't have the cash to be able to do
Pursue
that.
it.
We can't get more money?
So, I mean, you can always borrow money, again referenced in one of the industry
Can't
analysts'
we
footnotes.
get more equity If we walk in and say, we got 2 deals, which we can sign tomorrow in China, with a market that's exploding, that market is far larger than Canada, can't we raise more cash and equity?
I guess it's possible.
You guess it's possible?
Sure.
It's possible, but it's not smart from a strategic standpoint.
Why not?
Let's go into our strategy. We can talk about our strategy, but given the fact that we are taking on 2 very big risks with oil sludge.
This was the first one in England. It's
There's
not
a lot of
a
risk.
government guarantee.
There's a lot of risk with oil sludge because that's a market that we don't have any experience in right now.
Our technology can do it.
We think our technology can do it, but
How
when you
long
are
would it
trying
take
to
for it to
enter
test?
an entirely new market
How
that's
long would it take for it
completely,
to test it?
it would take a year
Why?
with the investment
How much
required. And
sludge do
then
we need to run through our existing plant in Saskatchewan to prove that it works? How much? I'm serious, how much?
3,000 tons would probably be
3,000 tons? Don't we
a
just-
fairly representative sample to make it statistically significant. We would want to take a fairly substantial amount.
We need to go through regulation as well to determine that the process is.
The Chinese government says, do it, next, that's the regulation.
Well, I want to go back.
The Chinese government is not our partner here, so the entire issue with, and one of our risk issues with the oil sludge market there is we're partnering with a private company. We don't entirely know what they're offering us there.
Do you think this private company, which has grown so quickly and it controls the mouth of the Yangtze River, is purely private?
Fair point. No, we don't. They have access to all of the permits. However, it's only in
They have
this region.
access to all their permits, or do they own all the permits and no permits and nobody else has them?
They own all permits. I don't.
How does that happen?
Probably excellent connections. with the
Excellent
Chinese
connection.
government.
So there's no risk with their first deal, with POPs and PCBs, and there's virtually no risk with the second deal.
There's
And
still a lot of risk with the second deal, though.
Why?
And a lot of that comes into play with, we know that this
Why is
private
there
company
risk?
has a facility.
A facility is massive.
The facility is massive, but what we don't understand right now is how much of the oil that we want to process, they're actually gonna let us store in the facility. We do think that there are a lot of storage constraints, and
What?
And we don't,
Wait, stop. Finish your sentence. What's wrong? Your mind go blank or something?
No, of course not.
Then what happened?
We have a lot of storage constraints, and at the same time, part of being able to offload this byproduct that we're going to be producing, we have no license as of right now to be able to sell that on the Chinese market.
Do you think our partner can get the license?
We think that that's a really big question, and by partnering with a government agency, we feel like we're mitigating a lot of that
All right,
risk.
continue. How much time, Aaron?
1 minute and 46 seconds.
Wonderful.
Okay.
Action plan?
Sure. Let me talk through our action plan really quickly. So Marissa mentioned that we have decided we want to partner with NIES. That's a done deal. We're going to make our initial investment in 2010 through a 50-50 joint venture. In 2011, we're going to launch our demonstration project in the Jiangsu province. We have chosen that province because that's where NIES is actually located, so we think that makes sense. It's worth mentioning that there is a competitor in that province right now. So our plan is to clean as much soil as we can there, but then move east to the Zhejiang province. That's another opportunity where there are a number of contaminated sites that have already been identified through NIES. So, and here's a map showing the PCB contamination.
Why are we looking at this, sir?
Can we go back to the action plan? And in 2017, the plan is to launch our second soil remediation unit.
What happens in 2020?
In 2019,
What happens in 2020?
more than likely the competition picks up.
Why is 2020 important to us, Manal?
It's important because the patents expire
Okay.
the year prior.
Okay. And so what do? We just let them expire? Let our license expire and just start declining like Eric wants us to do?
Well,
There's no other option that we have?
No, we can attempt to try and renew our licenses, but we know at that
A
time.
license for an expired patent is wasted, because it's now off patent. We don't have to renew a license, it's generic. That's the dumbest thing I've ever heard.
That's true, but the patent is for.
Why would we renew a license for a patent that's expired?
The
Why
patent
would
is
we do
for,
that?
the patent is
Why
for the
would we
United
do
States
that?
and Canada.
Yeah. Thank you. All right, stay here. Group number 1, your question for group number 3. number one, your questions for group number three.
Going back to your model, can you just touch on the royalties and how you accounted for the royalties and new units within the PCB?
Yeah, absolutely. So, go back to the last slide. So right up there in that revenue per ton, that figure is gotten from one of the analyst reports that's referenced in the footnotes to the case. It's included in the 700 figure. That's a net revenue figure.
Question number two. You have 5 seconds to ask your second question. Are you with it?
What case does this remind you of?
To be fair, again, Republic of Flower is always the safe answer here, but
Republic of Flower.
for a certain reason, our worry about the oil market and the capacity constraints and storage constraints reminded us of the constraints that Republic of Flower would have to deal with.
Republican Flower. It's not Republic of, it's not Republican.
Republic Flower?
Yes.
Do you remember the details?
I don't remember the details.
Third question for group number one.
Are you going to be doing anything in Canada? What's happening with Canada?
They're already doing stuff in Canada in the analyst report. I mean, we're planning to continue on with the status quo with the PCB and the POPs that they're already remediating the soil. And they've already planned to go forward with this industrial sludge market as well. So we followed that as part of the status quo plan.
And does that show in your numbers? Your Canadian operations, does that show in your numbers?
No, since we're not making any recommendations about doing anything in Canada.
She just said you're going to be doing more in Canada.
We recommended the company continue the status quo in Canada.
Which is the
We're
grow.
focusing on the decision in
Which is
China.
to grow in industrial sludge and pharmaceuticals.
Not in pharmaceuticals.
Not pharmaceuticals. Okay.
Non-pharmaceuticals.
Group number two, your questions for group number three.
What about China do you think allows you to charge $230 more per ton than you receive from your Canadian customers?
That'd be an excellent question for whoever wrote the analyst report that told us they were going to be able to get $700 per ton.
So you have no idea where that number came from. You just took it because it's in the report.
We took it from a report that was an industry report, so we thought it was an accurate assumption to build upon.
Gotcha. Question number two.
I have a question. You said that there was 2.2 million of the cash tied up in working capital. Given that the balance sheet only shows cash at 3.2, accounts receivable at 600,000, and accounts payable at 800,000, what asset is that tied up in?
That's a fantastic question. I'll answer you honestly. I didn't do any further analysis on that. Good one.
Question number three. Turn the dagger.
We could have made something of that.
I see that you're using debt to fund the initial CapEx for this joint venture. Does it bother you that you're in a highly cyclical industry and you're taking on that much debt for a company of this size?
So the average company in the industry has a 54% debt to equity ratio, or excuse me, debt to capital ratio. We're far below that right now. So
At 11%, so we feel very comfortable taking on 1.5 million in debt.
Great. Thank you very much, group number three.